There's this massive economic force moving in the background right now, and it's affecting everything, from the cost of your next vacation to the price of gas. That force, it's the surging US dollar. And in this quick explainer, we're going to break down exactly what's going on and why it matters so much to all of us. So here's what we're going to tackle. First, what does a strong dollar even mean? Why is this all happening now? Who are the winners and losers? And of course, what's coming next? We're going to cover all of it. Okay, first up, let's talk about the dollar's big moment. The headline here is pretty simple. The US dollar has been on an absolute tear, flexing its muscles against other major currencies like the euro and the Japanese yen. And believe me, this isn't just some number on a trading screen. It's a major shift that's sending shockwaves through the entire global economy. But you hear this term strong dollar thrown around all the time, right? So before we go any further, let's get on the same page about what we're actually talking about. At its absolute core, it really just boils down to purchasing power. A strong dollar means your dollar literally goes further when you're overseas. So think about it like this. That European vacation you've been dreaming of, or that cool camera from Japan, suddenly it costs you fewer of your own dollars than it would have just a year ago. And this is a classic two sides of the same coin situation, as you can see right here. I mean, for an American tourist, this is fantastic news. Your money just stretches further. But now let's flip that coin. If you're a business owner in another country trying to buy some American software, your costs just shot up. That puts a real squeeze on your bottom line. Okay, so that's the what. Now for the really big question, why? Why is all this happening right now? Well, it turns out it's not just one thing. It's really this powerful combination of three key drivers working together. I want you to think of it like a three-part engine, just revving up the dollar's value. You've got higher interest rates acting like a magnet for cash. You've got the dollar's reputation as a safe place to be in uncertain times. And then there's the simple fact that the US economy has been holding up pretty strong. Let's dig into each one. First up, and this is the big one, folks, interest rates. Right now, the US Federal Reserve is basically offering a better return on your money than many other major economies are. And that creates a really powerful pull. You can really see that magnet effect in action on this chart. Look, big-time investors are always hunting for the best possible return on their cash. It's just simple logic. So since U.S. investments are paying out more right now, a flood of global capital comes rushing in. And to buy those American investments, what do you need? You got it, U.S. dollars. More demand for dollars means a higher price for dollars. It's Econ 101. Okay, next up, we need to talk about the dollar's role as, well, kind of like a lighthouse in a storm. Whenever the seas of the global economy get choppy, whether that's from a conflict somewhere or just financial jitters, investors start looking for safety. And historically, that safe harbor has always been the US dollar. It's just seen as one of the most stable, reliable assets you can own. So it's this weird relationship. When global anxiety creeps up, the demand and, you guessed it, the value of the dollar usually climbs right along with it. And that brings us to our final driver. Now, this one isn't about the US economy being perfect. Far from it. It's more about it being, the best house in a tough neighborhood. In a world where a lot of economies are struggling, the US has just been holding up better than most. So when investors around the world look at the US, they see things like stable job numbers. They see that people are still out there spending money and that companies are still making decent profits. All of that signals stability. And that confidence makes the US a really attractive place to park your money, which, one more time, drives up demand for the dollar. All right, so we've covered the why. Now let's zoom out and look at the so what. Because a strong dollar doesn't just stay within US borders. It sends these massive ripple effects all across the globe. And this is so crucial to understand. It is not a simple win-lose game. Just look at this breakdown. A strong dollar can be incredibly painful for emerging markets that have to repay their loans in dollars. It can make essential things like oil more expensive for everyone. And get this, it even hurts American companies trying to sell their stuff overseas because all of a sudden their products are way more expensive for foreign customers. Which leads us to the big final question, right? How long is this going to last? And to figure that out, we've got to look at a few key things on the horizon that'll tell us where the dollar might be heading next. Yeah, the dollar's future really hangs on four big questions. First, what's the Fed going to do with interest rates? Are they going to start cutting? Second, what's going to happen with inflation here in the US? Third, how will all the geopolitical stuff play out? And finally, will other big economies start to pick up steam?
The answers to these questions are what's going to tell us if the dollar's surge is here to stay.
So you see, the path of the world's most important currency, it's not just some abstract thing for economists to debate. It's a story that affects our jobs, the prices we pay, and even global politics. All these moving parts we've talked about today are going to keep shaping our world. Really, the only question left is, what happens next?